Okay, and welcome back, students who are taking financial accounting, and this will be the last video in the 30 videos for Chapter 2, Analyzing and Recording Business Transactions. Um, in this series of videos, we covered, I explained that a lot of this information was covered in Chapter 1 and in other videos on the student community. Those are the Introduction to Accounting and Bookkeeping videos. We talked about double entry bookkeeping and why it's important. We talked about how to make a journal entry if you don't know how to make one, or just the general process that I think about when I create a journal entry. Remember, my way is not the right way. It's just a different way. How you go about learning how to create your own journal entries is up to you, but when you have a transaction, you need to be able to make a journal entry, and sometimes you're not going to find it in a book. You have to be able to think it through to make that entry. We talked about T accounts as a tool and how important, how to use it. And then we talked about the trial balance being a listing of the accounts and the balances in the accounts. From the trial balance, we're able to create the financial statements, which were the income statement, the statement of retained earnings, and the balance sheet. And just as an FYI, those are not the only three statements. All businesses will have a balance sheet and an income statement. Not all businesses will use a statement of retained earnings, but these are not the only statements that can be created. Okay, there's pro formas, budgets, and if you get into cost accounting, cost of production summaries. You can create, an accountant will create a financial statement, that makes sense for any situation that they need it for. But for the most part, these are and there's also the statement of cash flows, which we did not show you here because that will be for one whole chapter in the book on the statement of cash flows. In these first three chapters of the textbook, we're just trying to lay a foundation. A statement of cash flows, that'll be, that's like in a much later chapter, and that's a lot more difficult, and it isn't being presented right now because, like I said, in chapters 1, 2, and 3, we're just trying to take a 40,000 foot view of the basically bookkeeping. Okay, we're really not even getting into the financial accounting stuff in the first 3 chapters. Okay, so creating a statement of cash flow, which is another common statement that's used in businesses, the next most common statement that's used, that gets a special presentation in its own chapter later in the text. Right, so since we've covered the financial statements, income statement, statement of retained earnings, and balance sheet, and how they're formatted, the last thing we want to talk about here is the accounting cycle. Okay, and again, this was presented in the introductory videos in a flow chart in a different manner. I talked about it on several different videos, but this is the way it's being presented in the textbook. Okay, it starts out here as step 1: recognize, measure, and journalize transactions. So in step 1, you have a transaction, and it asks you to make the journal entry for it. Okay. Then in step 2, it says post the transactions to the general ledger accounts. Okay, so we're going to post the transactions in the general ledger accounts, meaning all we're doing is just rearranging the information when we post them to the ledger accounts. We're just grouping like information together. Now step 3, it says prepare and unadjust the trial balance. Now if you recall in the previous video here when I was talking about the trial balance, notice that the heading here only says trial balance. Okay, and remember I had talked about having a general ledger trial balance, an accounts receivable trial balance, and accounts payable trial balance. So I would never just write the word trial balance. I would write what this trial balance was for. So I'd write general ledger. However, I also had said that when we get to the end of the accounting period, we're going to go through a closing process. And in the closing process, we're going to create additional trial balances. There's a pre-adjusted, or it's also called unadjusted. All right, the reason why is because the numbers haven't been adjusted yet. Then we have an adjusted trial balance, which means we've looked at those balances and we've made adjustments to them so that we know the numbers are absolutely correct. And then we also have a post-closing trial balance. That post-closing trial balance is after we create that after we make our closing entries to bring our accounting equation into balance. And I realize that you haven't seen that, that we haven't talked about any of this. Because this here is all in chapter 3 and you're only in chapter 2. But let's get down here. As part of the accounting cycle, step 3 here, it says prepare an unadjusted trial balance. Okay, so this is begins part of the closing process. Okay, we take our general ledger accounts, and from there we want to create our financial statements, and we do that through the end of period accounting process and the closing process. To do that, though, we start here with creating the unadjusted or pre-adjusted trial balance. Now realize that up to this point in time, from here, steps 1 and step 2, let me erase that and make it neater. Step 1 and step 2 here is kind of like everything we've covered here in chapters 1 and 2. Chapter 3 is going to be everything from step 3 all the way over to here to step 8. Okay, so this is just to give you an idea as to what to look forward to in the next chapter. We create ourselves an unadjusted trial balance, but those numbers are not right. Okay, so what we have to do is we have to make them right. Okay, so we make additional journal entries in step 4, and we post those to our ledger accounts. So then in step 5, we create ourselves an adjusted trial balance because we've changed those figures. Once we have an adjusted trial balance where we know that the figures are absolutely correct, now this allows us to move into step 6, which is prepare our financial statements. Okay, so when we were looking at these here where we had from this trial balance, this here was our adjusted trial balance. And that's how I would have labeled this, adjusted trial balance. And from these figures, that would allow us to create our 3 financial statements, or 2, whichever it is that you're going to be doing. Okay, you're always going to do the balance sheet, you're always going to do the income statement, whether you create a statement of retained earnings or a statement of cash flows or any other statement, all depends upon the business itself. But in step 6 here, we're preparing those financial statements. But realize that when we're preparing the financial statements, those numbers are not absolutely correct, meaning remember from the statement of retained earnings we had $900 as an ending balance. Okay, well, we just moved that $900, we just put it into the balance sheet in order to create the balance sheet, but we haven't done anything to our ledger accounts. Okay, I mean all of our figures are still the same in our ledger accounts, and that's not correct because at the end of the accounting period we have to actually close out. So we have to, in step 7, we have to make closing journal entries. So we're going to journalize and post those closing entries, and when we do, that moves all of the information into the proper accounts so that our accounting equation is in balance. And when we've made those journal entries and posted them, now in step 8 we're able to prepare a post-closing trial balance. So when I'm looking at that post-closing trial balance, okay? Those are the ending balances in all of my general ledger accounts as of that specific date, or let's just say January 31st, okay? So, we'll have balances in our asset accounts, our liability accounts, and our equity accounts, but we won't have balances in our revenue or our expenses, right? Those balances are going to be zero because remember, revenues less expenses gives us a profit or loss, and we close those out to our retained earnings account in our equity, which is what brings our accounting equation back in the balance, because Y assets have to equal liabilities plus the equity, right? If we don't do that, we can create financial statements on paper, okay, and present that information, but we have to make the adjustments to our books, and that's why we make the closing entries and prepare a post-closing trial balance. Now, once we have that post-closing trial balance, once we have that post-closing trial balance from step 8 here, okay, that post-closing trial balance, those ending balances become the beginning balances for our balances. They become the beginning balances for our next accounting cycle, and we start the process all over again with step number 1. So, and that's all this is. It's just a circular thing where we go around and around and around, from one accounting period to the next. If we have a monthly accounting period, that means we're going to go through the circular process 12 times during the course of the year. If we have a every 4 weeks accounting period, that means we're going to go through this process 13 times during the course of the year. If we had a quarterly accounting period, obviously that's 4 times a year. And if we had a yearly accounting period, we would only do it once a year. But we would go through the same exact process again and again and again. All right, where we start out with beginning balances, we make journal entries, we post them to, we have transactions, we make the journal entries, we post them to the general ledger accounts, and then we go and we create our financial statements. And as the final step in that closing process, we have a post-closing trial balance, which becomes the beginning balances for the next period. And we go through everything all over again. We're right back up to here, okay? Which is what this diagram is, this here flow chart is showing. And again, I'm just repeating myself again because I presented the same information in a slightly different look. Okay, mine didn't look circular like this, but I presented the same exact information in the intro to accounting and bookkeeping videos, and even in the theory videos for chapter 1. So that's it for this here chapter, theory. In the beginning, it's kind of difficult because, there's so much information that you need to put into one, to use all at one time. And it's hard. It's like chicken or the egg. Which do you present first? Because everything affects everything else. And so you have to kind of like take this 40,000 foot view, see the totality of it. And then as you learn the information, you're able to put into place, associate, to something else and build your body of knowledge in that respect. The bookkeeping aspect of it, is, 3 chapters is too short, but, again, for accountants, they're not going to be they shouldn't be doing bookkeeping work, even though they should know how to do it. They're not going to do it on a daily basis. And of course, those who are taking like, business management, hospitality management, marketing, you don't need to know how to create financial statements. You need to know how to, the theory behind them. It's like understanding how your car works, how your engine works. But all you're concerned with is sticking the key in the ignition and turning. Well, it's the same thing. You're going to have these financial statements, which are the report card to the business. You should have some ideas to how they're created, but you don't have to actually do them yourself. And so you know, it's being presented in 3 chapters, this information on how to create them, you know, the data entry aspect of it, but you don't really get into the financial accounting aspects until chapter 4. So with that said, that's the end of these here theory videos for chapter 2. And watch the other videos, supplemental videos from YouTube and Matt Fisher 64. They'll present the information in a slightly different manner. You know, he's standing in front of a whiteboard and, you know, writing the information. So that might help. And, you know, I'll see you in when I do the work through the homework, assigned homework problems, you know, the short exercises, and problems, right? So until then, you know, hopefully, you know, you get this. And if not, feel free to contact an instructor.